Another business day. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations right here on Channels Television. I'm Ini John Mekwa. We start business from the global space where oil prices rose on Wednesday as supply concerns are resurfacing while peace talks ending Russia's invasion of Ukraine are likely to take longer, leaving in place sanctions on Russian crude and raising the chance of further restrictions on its buyers. So we see, looking at the numbers this morning, Brent is at $66.34 a barrel after it gained 0.84%. U.S. West Texas Intermediate crude is for September delivery. That's set to expire today, and it went up to $62.80 a barrel after it gained 0.72%. Prices settled down more than 1% on Tuesday on optimism that a deal to end the war seemed closer, which could mean that there'll be easing of sanctions on Russia and an increase in global oil supply. However, despite comments from the U.S. President Donald Trump on Tuesday that the U.S. might provide air support as part of a deal to end Russia's war in the country, he also considered Russian President Vladimir Putin might not want to make a deal after all. In the U.S., we see that BP operations at its 440,000 barrels per day refinery in Wheaton, Indiana, they were affected by flood caused by severe thunderstorm overnight, potentially weighing on the facility's crude demand. The site is a key fuel producer for the Midwest markets. Let's do some business right here in Nigeria. The managing director of Jaiz Bank, Mr. Haruna Musa, says that the bank is now fully compliant with the new capital threshold that's issued by the central bank. He was speaking at a press conference to unveil the bank's new corporate identity in the Federal Capital Territory, Abuja. According to Mr. Haruna, the rebranding of the bank is a bold statement of intent and a major milestone in the journey of the financial institution since it emerged as Nigeria's foremost ethical bank.
It's a new dawn for Jaiz Bank as the managing director of the bank, Mr. Haruna Musa, and some of its board members unveil its new logo and colors, showcasing its rebranded corporate identity.
Okay,
this transformation is a strategic move that speaks to a deeper shift in banking and a deliberate effort by the bank to modernize its platforms while reaffirming its commitment to ethical, inclusive, and customer-focused banking.
This transformation speaks to a deeper shift in banking, one where customers demand transparency, fairness, and social impact. With our refreshed identity, our focus is very clear: to deliver accessible, ethical banking that celebrates Nigeria's rich cultural and religious diversity. Our new payoff line, "With you for life," reflects our promise to stand with our customers through every stretch of their journey.
The bank's management also explains the strategic reason behind the rebranding, improvements in financial statements, and plans to establish branches outside Nigeria.
In 2023, for the first time, our bank closed with a profit of about 11.4 billion. In 1 year, we have more than double that profitability to close at 24.4 billion. This year, 2025, we're aspiring to close beyond 30 billion. Honestly, we're seeing Jaiz Bank beyond Nigeria, because one of our key aspirations is to be among the top non-interest banks in Africa in the next 5 years. So once that is done, you will see Jaiz Bank, across Africa. Anybody who desires, ethics, honestly, Jaiz Bank is his or her bank. So it's for everybody. Again, the only difference is the fact that, as a bank, we do not receive interest and we don't give interest. Our model is based on profit and loss sharing.
So, with you for life. With you for life. Established nearly 14 years ago and operating 53 branches across Nigeria, Jaiz Bank, the trailblazing non-interest bank, is promising to remain steadfast in its mission to redefine ethical banking in Africa and beyond. From Abuja, Victoria Longjohn, Channels Television News.
And now let's discuss technology, which is at the foundation of every development these days. Nigeria's technology sector is no longer news, so substantial growth is what has been recorded. And we've seen, for instance, that data consumption has nearly doubled in 2 years. And this is fueled by increased adoption of smartphones, adoption and expansion of digital services. E-commerce comes up at the top of that. And this has also spread to health as well as manufacturing. Let's find out the trend when it comes to technology adoption and also its development in the country. And we're doing this with the Group Managing Director of ITH Holdings. He's also the President of CIO Club Africa, Mr. Olusegun Dada. Mr. Dada, good morning and welcome to the program.
Yeah, good morning and thank you for having me.
Good to have you. So what would you say, or how would you describe the trend, technology trend in the country? Everybody's using technology, but let's come home, domestic. We often preach the message of innovating to solve domestic concerns or challenges at this time. Of course, technology is at the fore of that. So I'm looking at it from that perspective. How would you describe the trend, of technology in Nigeria, technology adoption and development in Nigeria?
Okay, thank you. Regarding technology adoption, I would say this has really grown massively over the years. Looking at where we were, for instance, 20 years ago, we could say back then, even starting from the fintech environment, where banking services were being done, and comparing it to where it is today, it has really improved. Today, you could see a lot of people, even from the urban and rural area, carrying out a lot of financial transactions without going to the bank. Today, you could see people even opening up accounts, checking their bank statement, doing a lot of wonderful things around that space. Apart from that, also, too, you mentioned around e-commerce. Look at e-commerce today. Each and every one of us, you want to buy any type of item, you can easily just go online, go to Konga, go to Jumia, and can be able to purchase anything you need and have it delivered to you. Again, all of these things has been based on a lot of various policies and things we've seen from both government, private sector, investment that has been done, which has helped to grow the trust, which has also helped to grow the belief of people around technology.
So talking about government policies, we've seen the establishment of the National Information Technology Development Agencies. We know they have been really busy, especially regulating that space. I heard a lot about them when it comes to data privacy. We also have the Presidential Enabling Business Environment Council, PEBEC, that has been on even before the talk around technology. How impactful are they in this technology space?
I would say it has been very impactful. For instance, looking at NIDA with the policy or the mandate to regulate, develop, and also drive ICT adoption in Nigeria. You can say that, yes, this is really being done with a lot of various policies, even starting from the Nigeria Data Protection, which was rolled out in 2019. This has really helped a lot of stakeholders, especially individuals, to give trust to our ICT and digital economy drive. Because with this, everyone has the understanding that, yes, their data is protected. They have an understanding that necessary security and policies and frameworks are in place around that. Also, you could also see a lot of things around setting the right guidelines even for startup, even for entrepreneurs, to ensure that they can be able to also strive. And you can also see a lot of things that NIDA has been doing when it comes to training, empowerment. For instance, the 3 million talents, the technical talents program, which has also helped in generating a whole lot of skill acquisition within the country. And talking about the Presidential Enabling Business Environment Council, they've also done quite a lot since inception, which was launched in 2016. And some of the things they've done, which you could see, even starting from the CAC system that has been fully digitalized, and also looking at around even tax filing, looking at visa processing, there is a whole lot that has been done, and a lot of these things has also helped even investors' confidence within our economy and also in the sector in a nutshell.
But I mean, in spite of this, we still have the issue of infrastructural deficits. That is a drawback in all of this. We know it cannot be covered in, a day or so, but do you see intentional effort to maybe accelerate the spread or penetration of internet, apart from what the private sector is doing? The major infrastructure obviously comes from the government. NCC, although, has been complaining of vandalism of their infrastructure, and that, of course, is another hurdle to handle.
Yes, when it comes to Nigeria, yes, we agree that there are still challenges, and infrastructure really is one of the major problem. But we could also see a lot of effort that the government is also trying to put in place at this moment. Also, even looking at it with partnership with various private sector in trying to improve the infrastructure. For instance, you can see the telecoms system even upgrading their various technology infrastructure in ensuring that it can be able to accommodate more users and provide efficient and wonderful services. Not just also that, too, even around various aspects, starting from roads, starting from electricity, and these are really these are critical infrastructures that are needed to get the economy growing. But we can also see the lot of effort that is being put in place. And like you said,
and we see a report says that the infrastructural gap is about $1.6 trillion. I wonder when we can cover that kind of gap. $1.6 trillion, that's a lot of money.
Okay, so yes, it's a whole lot, but I'm also confident with how we are also growing as a country, because the level of revenue we are also generating, the level of investment we are also getting. For instance, you can see a lot of investors coming in, even with the frameworks and the enabling environment the government is putting in place right now. A lot of investors is coming in more to invest because they believe right now that, okay, they can be able to invest and also get the confidence to be able to even recoup back their money at the long run. For instance, you could see what the government has done when it comes to the FX issues, which has affected a whole lot over the past couple of years, even reduced the investors' trust in the economy. But with this, I see a lot of changes, and I can see the light at the tunnel in the next couple of years.
And they say, I mean, we shouldn't look at challenges as challenges. They're actually opportunities for investors and investment and entrepreneurs. What are the opportunities that, all we have discussed, the good, the bad, the not so good, the ugly? What opportunities do they present to entrepreneurs? What are some of those?
Okay, looking at it from opportunities perspective, like you rightly said, I'm really excited by them, because with the right policies, with the right talent, and also innovation, and also putting together the proper execution, I believe Nigeria as a whole can become the undisputed hub for digital economy in Africa, at least not just in West Africa, but in Africa. And for entrepreneurs as a whole, the opportunity creates room for us to be able to solve problems, real problems, and not just copying Silicon Valley, but solving real problems that applies to us, for someone staying in Aba, for someone staying in Jos, someone in Lagos. Because like you rightly mentioned, even e-commerce today, we are just still scratching the surface. We still have a lot of these things not still being adopted fully in the rural areas, which also some of these things are due to infrastructural challenges. And as that also grows with the level of investment we are having, we see a lot of opportunities for entrepreneurs to take advantage on.
What sectors do you think will be the most juicy at this time?
Wow, that is a dicey question, trust me, that's a dicey question. But I can still tell you today that technology is still evolving, and we are just scratching the face. For instance, there's a lot to be done from the government perspective when it comes to technology, incorporating all of our data together, putting up a digitalized environment that can be able to provide a secure environment for each and everyone. So I still see technology still evolving as the day goes by.
All right, thank you so much for your time this morning, Mr. Olusegun Dada, the Group Managing Director of ITH Holdings, and also the President of CIO Club Africa.
Thank you very much. Thank you.
Well, talking about technology is one of the attractions for the state of California. They're seeking to explore opportunities to address not just technology, but also climate change concerns through a partnership with the Nigerian government and the private sector. George Etomi and Partners, a foremost law firm in Nigeria, facilitating this by organizing meetings between the California Africa Climate and Economic Delegation, as well as the organized private sector, and it was held in Lagos. It's a meeting that begins softly with greetings and socialization between the 40 delegates who make up the California Africa Climate and Economic Partnership Group and members of Nigeria's organized private sector. This follows a similar one between the delegates and government officials in Abuja. For this, in Lagos, the organizers describe it as an evening of real business discussions and frank talks, and it's all geared towards exploring the economic potentials of a Nigeria and California partnership. And in no time, the crux of the meeting is in focus.
Nigeria is in need of investment, foreign direct investment. There's a lot of things that have been happening in our country in the last 2 years. And the state of California is desirous of forging partnerships in Africa. They've been to Kenya, they are in Nigeria, and they are also going to Ghana. We have to show that we are also ready to partner. They've been to Abuja, they've heard from the government side, and we said it might be a good idea that they also come to Lagos and meet the organized private sector. We know that if we try to book individual appointments, they can spend 1 month and they may not be able to meet everybody. And we believe that having this kind of event is what will lead to interaction. That's why we started with a cocktail, so that people can meet and talk together.
Behind the California Africa Climate and Economic Delegation.
Being America's most populous state, the world's 4th largest economy, and the largest subnational in the globe, the government of the state of California, represented here by the Secretary of Transportation, Tokso Mishaki, as well as other members of the group from the University of the State of California, believe that the economy needs Africa to retain its status.
By the year 2050, Africa will have the world's largest and youngest population. 1 in 4 people in the world, 1 in 4 will be of African descent or live on the continent. By 2050, it's estimated Nigeria's population will grow to 400 million people. By the year 2050, 400 million people, making it the world's 4th most populous nation. Today, 10 of the world's 20 fastest growing economies, 10 of the world's 20 fastest economies are in sub-Saharan Africa. Nigeria represents the largest economy in West Africa. Some key areas of collaboration with the Bay Area Council and UC Davis and Nigeria include clean transportation, clean energy, digital technology, the creative economy, climate smart agriculture, and university partnerships, just to name a few. So we've brought business and non-governmental representatives from California involved with these issues to come and have engagement with key sectors and partners in Nigeria. California is the capital of America's entertainment economy, and African culture has long influenced American creative arts. I'll tell you that one of the things that I'm most proud of, I share this all the time with people, is Nollywood and Afrobeats. When it comes to that, in America, nothing tops it. And this is something that Nigerians and Africans should be very proud of that influence of Nollywood and Afrobeats around the world. With the growth of the film industry in Nigeria, often referred to as Nollywood, and the spread of new musical genres like Afrobeats, there are clearly opportunities for California in its leadership in the entertainment and creative economy space, and Africa to partner on the creative arts.
Assuring the Californian delegation that Nigeria is ready for the proposed partnership, presentations on reforms and policies are shared.
An investment protection framework, and that is driven by the Nigerian Investment Promotion Act. Now, with this act, the government has put in place a system which seeks to break bottlenecks which existed in the past. So what it is that they've created a flow whereby it's easier for businesses to function within, Nigeria.
Subsidy removal. The subsidy removal has led to savings of about $84 billion for the country. Now, it was painful in the beginning, but gradually the economy is adjusting and the people are adjusting also, right? And savings from that removal of subsidy has also helped to finance critical construction projects that are going on in the country. The foreign exchange liberalization, which I've spoken to earlier, has also helped in foreign capital flows, and the tax reforms.
The delegation is also exploring potentials in technology, which it believes has already taken roots and is expanding in Lagos State. Well, that's it. California is interested in Nigeria, but we need to have our own foundation, which is why the Georgia Tomi firm decided to share some of those efforts by the government to stabilize the business environment, the reforms and policy that should be consistent to attract investments. Let's stay more on this, on that building a sustainable business in the country and how to keep conversations like this going on. But taking them more than conversation is the more important thing, and bringing those FDIs into the country, I believe that's more important. So we'll be discussing, looking at a business-to-business model this morning with the convener and Chief Executive Officer of Primary Business Network, Mr. Bola Lawal. Mr. Lawal, good morning and welcome to the program.
Good morning. Thank you very much for having me.
Great. I believe you heard a bit of that report.
Yes.
So it's interesting that the biggest subnational in the world is interested in Nigeria.
Yes.
You know, even though you would say, okay, should it be the US? Should it be just California? But we know the state of California is really big enough,
Yep.
you know, and opportunities abound. And then we had the Secretary of Transport for the state talking about the entertainment industry, which already is connected there, and we should be proud of that. But we also have our own in-house workings to do. We need to ensure that we're ready for such an attention.
Yep.
For you now, dealing with businesses, connecting businesses, our network and all of that, how ready is Nigeria for an attention like this?
Thank you very much again for having me. Nigeria is very ready. Everything, the signs look towards that. Yes, if you ask an average business person, they'll say things are hard. There are the reforms by the current government. There are hard decisions that have been made. But if you look at just key economic indices, if you think about population growth, our natural resources are still here, our talent, creative economy, all those things are still here, and in fact growing on a bigger scale, from fashion to movies, music, all of that. We have massive opportunities. Africa is still the youngest continent. Nigeria has probably the biggest pool of young black people in the world that speak English. I expect to say this because English is still the language of business. Anybody that wants to argue can argue, and we have plenty of them. We have bright young people. A lot still needs to be done education-wise in terms of building our pipeline, because there's this argument, okay, do you invest in infrastructure or do you invest in people? I always say you don't pit both against each other, because they need each other. You need infrastructure, you need industry, you need those things available, because industry funds education. Industry employs the product of education. So, and where we are right now, we're prime. It's a prime moment. It's as a business person, even though it's challenging, getting access to finance, getting access to quality business, invoices are always hanging somewhere, but we are still in a very key moment. If you're in business, you should still be very excited, even though the challenges are there, but you should still be very excited, because the key thing about business is opportunities being available, and there are tons of opportunities, whether we need people to come in FDI-wise or whether internally more people should rise up and take the bull by the horn and play in key industries, tech, agriculture, all of these opportunities that we have around us. It's a very good moment.
Yeah, but you know, we've been talking about potentials, opportunities for decades, and sometimes it can get frustrating. You talk to a lot of people in the real sector, and so one would say, well, what can we do differently compared to what we've been doing to really harness these opportunities? We see the opportunities are there, and unfortunately sometimes it does look like, you know, the people from outside exploit those opportunities to the detriment of the local players. How do we change the conversation?
So one, the conundrum is, if you, for example, you know, there's a program that I was in a couple of years ago, and they say, as a leader, leave the dance floor and go to the balcony and watch what's happening on the dance floor. You get a bit more clarity. Maybe what's happening is people coming from outside, they don't have any agenda, taking out all the noise. All they see are the real opportunities existing. An average person that is already here has some type of bias, political, economic, cultural, religious. We have something that is clouding us. And also challenges with opportunities. But when you are coming...
But we have diasporans. Shouldn't they be seen from...
Something got them out the country. So they already have something already blocking them. There's some sort of bias. Like, I'm diasporan, right? I've been doing business in Nigeria since 2016. And it has never been clearer than now for me to see the opportunities. And
Would it be because you've gone outside?
Yes. Yes, I've gone outside. I've seen how things are. And I also know that here, opportunities are abound. And I can leverage a lot of my networks, a lot of the things that I've learned, and bring it back home. The folks coming from outside as well, the different ethnicities that come here, did you see all they see is opportunity? Now, for us, what we need is more collaboration, work together. Like, I run this community, Premier Business Network. There's over 1,000 members, a lot of business owners, founders, executives, cut across all the industry. And within our own, I'll say, little ecosystem, what we've been able to do is collaborate. And you can see real time how companies can leverage on expertise and get things done. I'll go to tech because a lot of my background is in building businesses, is in tech. I'll go to tech. You would see banks and fintechs. Fintechs can literally start a new application tomorrow morning. If a bank tries to do it, have you sent it to Oga? Have you sent the approval? So it's a little slower, but the banks have money. The banks have branches in like everywhere in the country. A fintech can't do that. If a fintech and the bank collaborate.
Is there no collaboration? I thought there was collaboration between fintech and traditional banks.
It's not where it needs to be. It's not where it needs to be. We still have heroes in business where, you don't need those fintechs, so why are we going to share commission with them? I can call my tech team, we'll build it. We'll build it 18 months. Okay, where's the application? It's still taking time to develop.
MD has not approved.
MD has not approved.
The board hasn't met.
While you're trying to deal with a young person that understands how to build tech, may not necessarily know business, but understands how to build tech, understands how to build fast, will make mistakes. So collaborations, for example, that work well, will just make things go through the roof. For example, in fintech, in the tech world, I'm not trying to advertise for them, but...
I hope you don't mention the brand name.
Okay, there's a particular bank. There's a particular bank that is known to be upwardly mobile tech-wise. The reason why they're that is that one of the very, very big fintechs now that's all over everywhere, that their POS is the fastest, if you know what I'm talking about, used to power their tech. And they were able to do amazing things together. And that's what we're talking about. Whether it's in creative economy, it's in agriculture, agro-processing, it's in tech, the more local collaborations, the better we'll be able to harness on the opportunities that are available. And don't be angry at the people coming in and taking opportunities. Partner with them. This guy, I see all of you foreigners going into the bushes, going to farm. Is there something we're doing wrong? Can I work with you? Can we partner? Those are the things that I would love to see more. And if I would just say anything, that's why business communities, business networks are very important, because sometimes some people just don't know how. I don't know, what am I supposed to do? How can I connect? Well, if you're in a space or in an environment that will help you get that done, enhance that, then you are probably more than likely going to be more successful, because you are in a controlled environment that people will help you. But the opportunities are there. Let's collaborate. Let's work together.
So I hear you give the example of, in the tech space and all of that. But I'm thinking more about, what about the manufacturing, for instance? I know these are some of the benefits of processing zone, where one person's output is another person's raw materials, but I mean, those processing zones, I hear the requirement to get on them is for the big guys, but I wonder if there could be a community in the real sector, in the manufacturing, where there's a common facility, power, for instance, and then this finished products ends up as a raw material here, and I think that would create a very good ecosystem for the real sector.
I agree. So you're speaking in value chains, right? If you think oil and gas, for example, it's upstream, midstream, downstream. You figure out where you can play in and you exploit from there. And this is probably also where government can key in a bit more as the facilitator, as the engineer of business and business growth. Maybe a lot of us capitalists don't believe government should be in the business of business, but government should be the ones to identify the gaps, the areas, and hey guys, okay, we have this agro-processing zone. These are the companies that are there. We need more companies in this area so that you can take from here and add value to it and maybe get it to the next person within the value chain or get it out there for consumers. We need governments, and when I speak government, I'm not just talking federal government, because people already know everything is government's problem. But the work lies a lot within even subnationals, within states, within regions. We don't see a lot more regional corporations. I really love the Southeast East Commission, Development Commission that the government has set up. I've been calling for that one particularly for a long time, and all of those regional corporations, because what they would do is look at states, for example, okay, in the Southwest, what can you guys do together? Do you need transportation that cuts across state lines? Do you need, so even some of these agro-processing zones, you saw Lagos State talk about the food program, and where Niger State said, we want to farm for Lagos, we want to feed Lagos. A lot of those things starts with government, and then private sector can come in, and private sector can work together, because we eliminate waste. There's so much things get wasted because people are working in silos. A value chain, people are supposed to, it's a chain for a reason. People are supposed to work together. People are supposed to collaborate. And in manufacturing, you save money, there's less waste, and you make more money. Because in manufacturing, margins are typically small, unless you figure out your operational excellence, you've optimized your operations, then maybe you can increase your margins. But if you work together, if you have people within a value chain that you can fight off of, take things off of. So, okay, you produce this, I'll add value to it, I'm selling it, you make more money together. So we need more of that. We are just not in a very collaborative culture. That's the reason why there's a better pass my neighbor, right? So
always in competition.
We're always in competition. and there are maxims like the sky is big for everyone. Some people don't agree with that, because sometimes the sky may not be as big for everyone. But the thing is, work together so you can make more money, so you can spend less and optimize profits. People need to work together.
So you interact with a lot of businesses, and I want to ask about the sentiment, of your past my neighbor and all of that. Mm-hmm. Perhaps the message is not being preached clear enough, mm-hmm. because I believe if a business says that there are opportunities to make more money, you can let down your ego and collaborate with the next business. Perhaps it's the issue of preaching the message more, to know that there's the need for collaboration between businesses, mm-hmm. To make this work, and for everybody to eat a bigger plate of meal or something.
Well, first of all, if everything worked perfectly, then business consultants would be out of business, right? So, and maybe there won't be a need for a community. I think the key thing is, again, with our mindset, our conditioning as a people. You just think that everyone is out there for you, and you can't blame some people for feeling that way, because there's fraud, deception. You promised A. We are in an environment people will overpromise and underdeliver. What we can do, again, by sharing knowledge, and that's the reason why business communities are very key, because For example, ours, you engage every day. We have WhatsApp community, we have programs, we have platforms, we have physical events, we have virtual events. We are constantly talking to each other every day. Imagine someone you communicate with every day. There's a particular topic. Now, let's say we want to discuss inflation. We all discuss it. We want to discuss manufacturing, or we want to discuss agro-processing. We're all discussing it. And you're saying, okay, I can learn from this person. You're getting more of a warm feeling with discussing and engaging with the person. There's a good chance that if a business opportunity comes around, you trust the person more. You'll be more receptive to do the business with them. And I think that's why we need more of it. You see Chamber of Commerce's, Lagos Chamber of Commerce and some of the other Chamber of Commerce's, they're very important. Business networks, communities, social spaces are very important because what they do is help break down that barrier, because an average person knows how much, first of all, cost of capital is high. You know how much you can source money from banks. You know what you have to go through to get to where you've gotten to now. So you're a bit apprehensive to just jump into anything. But the more we demystify these things, the more we break down the barriers and show businesses the reason to work together, to collaborate, the better things will move, and things will move a bit faster.
All right, thank you so much. We hope there'll be more collaboration between businesses and more trust. I think that's at the root of it.
Trust. Trust is very key, yes.
Yeah, Mr. Bola Lawal, convener and chief executive officer of Premier Business Network. Thank you for your time and the tips.
Thank you very much. Thank you.
Let's take a break now. When we come back, we go global here on Business Morning. Please stay with us. Welcome back. It's still Business Morning. We go global now with Laddie Williams. Laddie?
So another day, and definitely we're seeing movement, when it comes to the global economy, but people are still waiting for those meetings, high-profile meetings, coming up this week. But let's start off.
Sorry, Laddie, before you start off, one of the drivers of oil price this morning is obviously the expectation of the end of the war in Ukraine and sanctions on Russia. But I thought I heard after the meeting, the Alaska meeting, that there will be no sanction on Russian oil anymore while we are in this process of a peace deal. But it seems it's back. The fear of sanction on Russian oil is still there. Perhaps I missed something. Did you get something?
I guess it's still that uncertainty around if Ukraine is going to give in to letting out some of its
Crimea. I think
that's Crimea. But at the end of the day, those sanctions, if they remain, at this point, that means less oil that's coming out from Russia.
So it doesn't.
But if the sanctions, are lifted and
then
maybe stay lifted, then there's more oil.
So I guess we haven't heard the status or the stance of President Trump on the sanction on Russian oil while the talk is going on. I know the next thing we're expecting is the tripartite talk, Russia, Ukraine, and the U.S. But while this process is on, will there be sanctions on Russian oil? I think that's the uncertainty.
That's where there's serious uncertainty. And we know how investors react. Once there's uncertainty, they try to just stay on the sideline. At this point, and that's why we're seeing exactly. That's why we're seeing depressed prices there. But let's start off in Asia now. See, the People's Bank of China, they kept their benchmark loan prime rate unchanged as expected. Today, with Beijing seeing resulting more fiscal measures to boost growth instead of further loosening monetary policy. The People's Bank of China kept its one-year loan prime rate at 3.0% as expected, while its 5-year LPR, which is used to determine mortgage rates, that remain unchanged at 3.5%. Both rates were at historical lows after a slew of cuts by Beijing over the past 3 years. So we're seeing those rates kept low there. Then we see in Japan, they posted an unexpected trade deficit in July as exports fell for a third straight month. That's for Japan, weighed down by softer global demand and the impact of shifting U.S. trade policies. Government data released today showed a deficit of 117.5 billion yen. That's about $800 million. Missing forecast for 196.2 billion yen surplus and reversing from 152.1 billion yen surplus in June. Exports dropped to 2.6% year-on-year, a steeper fall than expected. That's a 2.1% decline, with autos and steel particularly hit by U.S. tariffs. So yeah, we're seeing the impact there of the tariffs. Then we head on to the UK now. We see UK inflation ticked higher in July, with consumer prices rising 3.8% year-on-year, up from 3.6% in June, and just above expectations of 3.7%, according to official data. The uptick was fueled mainly by energy costs, as fuel price inflation eased its decline from 9.0% in June to 6.7% in July, lifting the headline rate by 0.1 percentage points. Services inflation also pushed the figure higher, climbing to 5.0% from 4.7% and surpassing the Bank of England's 4.9% forecast. The increase reflected base effects in communications and hospitality, alongside a sharp 30.2% monthly surge in airfares tied to the school holiday period. And that takes me to Canada now. We got Canada's headline inflation. Consumer price index eased to 1.7% year-on-year in July, down from June's 1.9%, excluding gasoline. Core inflation held firmer at 2.5%, steady with June, while underlying Bank of Ghana measures remain elevated. The CPI median at 3.1% and the CPI trim, that was at 3.0%. Joining me now to discuss, we have Julian Karagwasian. He's a visiting lecturer in economics at McGill University in Montreal and former special advisor in the Ministry of Finance in Canada. Great to have you on the show. Good morning.
Good morning, Laddie. Nice to be here.
Fantastic. So what were the key, the main factors contributing to the decrease in Canada's headline CPI inflation in July, and what specific components saw, the declines there?
The specific component that saw a decline that drove the headline inflation rate down to 1.7 was energy costs. But there's a couple of other dynamics that are a little worrisome, but that was the main factor driving the headline inflation rate down.
All right, so, definitely, I guess that's good news, at this point. But are there any underlying risks that you've seen in the data that suggests that, the Canadians might not be out of the woods yet?
Well, I think you see this trend towards more and more housing, unaffordability. Shelter costs were up over 3%, and that was driven by I think over 5% increase in rent. And food prices food inflation continues to be positive. Food inflation's up over 3%, and so these are underlying trends that are masked by the decline in the headline rate. But those are some underlying worrisome trends that I would be looking out for very closely.
And, definitely economists and experts there would have, more forecasts at this point, seeing the inflation numbers, coming out quite good at this point. So in your view, what are you seeing in this second half of 2025 for Canada's economy?
I do think that the headline inflation rate will remain subdued. I think part of the reason, so we've seen a pretty strong labor market this year, but I think part of the reason in the second half of this year that inflation will remain subdued is the slowing of the economy, really weak investment growth as a result of the trade policy uncertainty. So those are really big factors that will keep inflation contained and may give the Bank of Canada some room to lower interest rates given the softening economy.
And we've seen, the talks in Alaska with, President Putin, President Trump. We've also seen the one with President Zelensky and, with European leaders. So the meetings are going on. But how are you guys in Canada seeing, what's playing out, this week, with all of these high-level meetings?
Well, for the way we're seeing it up north here in Canada, I think there's going to have to be, for an end to this war and to bring Russia and Ukraine and all the parties at the table together, there is going to have to be, every side's going to have to give up something to end the war. And so we're waiting. We're a part of that. Canada's obviously a part of NATO, and we're aligned with the allies. The way I see this playing out is that some concessions are going to have to be given, some painful ones on all sides, in order to end the conflict and add some more certainty to the global economic outlook.
Right, and you did mention, painful, concessions on every side. But, when you look at it, we're seeing Ukraine, they're having to, give up some of their, their country, at this point. And, definitely Russia will be on the receiving end, of that. Do you think, Russia's giving up much, or they have much to give up, in the war?
I think we could probably end this conflict without having Ukraine give up more territory than Crimea, which was, before the 1950s with Russia, and was put in Ukraine for administrative reasons. No one ever thought the USSR would collapse, but I don't think Ukraine has to give up territory. I think both countries need security guarantees. One needs security guarantees from the West, that's Ukraine, and Russia's looking for guarantees to have no more NATO expansion. And so perhaps the end of the war can turn on this kind of negotiation rather than Ukraine having to give up territory, which it shouldn't have to do. And I think Russia's looking for an end to NATO expansion to its borders.
All right, definitely everything is going on right now. Definitely, we're trying to find, expectations of what happens with the global economy when it comes to inflation, currency. But still looking at, Canada's inflation now, we see, analysts suggesting that the Bank of Canada may have, room to deliver more easing, when it comes to interest rates. What does this mean in the context of monetary policy, and why might the central bank consider lowering interest rates further, even though we still have those, underlying risks there?
I think that probably the main driver or motivation for the Bank of Canada one of the drivers to be able to lower rates is the fact that the Canadian economy is now feeling the effects of extreme trade policy uncertainty. And this is affecting investment. It's affecting the overall economic outlook. And so I think ultimately this is what will sway the Bank of Canada to lower interest rates in the second half of the year, in the fall, unless there's some offsetting changes on the horizon. But as we're looking right now with current economic dynamics, I believe they will have the room and the motivation to ease off more on monetary policy.
All right, let's try to imagine now, the Bank of Canada, cutting rates at some point this year or not cutting. What does it mean for the Canadian dollar?
Well, that's one of the key questions, Laddie. I think if the Americans return to an easing cycle, that will give us the ability to return to an easing cycle without having Canadian dollar depreciation. If the Federal Reserve holds fast and does not reduce their interest rate, their Fed funds rate, and we reduce our rate, that will push Canada in a softening direction, the Canadian dollar.
All right, and definitely, I guess that's good for the Canadian people. We're seeing the inflation numbers still trending downward, and possibility of the Canadian dollar there softening. I guess that's good news.
That is good. That will be good for exports. At the same time, the across the board depreciation effects of the Canadian dollar will make imports more expensive and could provide some kind of positive impulse to inflation.
All right. Yeah, I guess a lot to look out for there in the Canadian economy in this second half of 2025. But thank you so much for breaking it down for us. The latest July inflation right there, easing numbers. Was Mr. Julian Karagweshian there, right there in Canada, helping us break it down. Thank you so much for coming on the show today.
Thank you, Laddie. Thank you for having me. Pleasure.
All right. All right, so yeah, we have markets that, don't sleep at this point. And that's talking about Bitcoin there hitting a 2-week low near $113,000. Remember, it touched $124,000, briefly. That didn't last very long, but we've seen, downtrend since hitting that, milestone, and now it's trading $113,000, and there's still analysts who believe there's still weakness, coming. There's still uncertainty, and hitting a 2-week low. Some investors might find that as a buying opportunity, while some might, be afraid at this point, thinking that there might still be some lows coming for Bitcoin. So all eyes on the Federal Reserve's Jackson Hole Symposium, and also geopolitical risk. Investors keeping their eyes on what's playing out with Russia and Ukraine, with talks ahead. But we see the currency there, risk assets. Almost seems like risk-off sentiment might be coming into play at this point, Ini.
Yeah, well, it looks that way, especially for the cryptocurrency investors.
And it doesn't get riskier than this, Bitcoin.
Really? We used to have it at 60,000, so...
Right.
I just wanted to remind you that.
Exactly. Wow. That seems so long ago.
It seems so long ago.
But it happened.
It happened, and I think it was this
16,000
year.
happened too.
Yes. No, I think 65 we had this year.
Yeah, about this year, before President Trump, got into office.
Yes. So it's not so far away, but let's keep our minds open.
Right.
And pockets. Thank you, Laddie. All right, just before we go, I'll tell you that the Nigerian stock market yesterday closed almost 1.5% down in the red, and we're down now to 142,000 level. Also lost all of the trillions of naira to close at 90.22 trillion naira is what the market cap closed at yesterday. Activity mostly green, but from the day before. Top gainers, NML Wear, Dark Communication, the unusual ones, top the gray. But when you see the top losers, that's what tells you what's going on in the market at this time. Insurance, we know, has been at the top there. So a lot of profit taking is happening right there. But yesterday's one was led by Dangote Cement, but also the insurance, they moved the market to the green side. We'll see if there'll be a little bit of recovery. We've had negative trade since 3 days last week, and second one yesterday this week. So 5 consecutive. We don't want to wipe off all the profits we have made, but that's where we are. Perhaps some investors will be attracted to the market at the lower prices by intraday. Laddie Williams will be here to give you that story. 1:30 is the time for Business Incorporated, and Laddie will be here to give you the gist of that. I'm Ini John Mekwa, and that is all I have for you on Business Morning today. I'll see you tomorrow, God's grace.